Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation Group. It's great to be with everybody today. Today is Thursday, November 6th, 2025. Today's webinar is called Stocks Hold Key Levels as Breadth Recovers. And, we write these titles the night before, and it has changed today, but we're going to be updating how some of the price action is looking. There are some other levels kind of emerging and coming on the chart now, and we're going to cover those. Let me just make sure everything's working. Good. Just some disclosures. Also show you our standardized returns of some ETFs. If you want to check those out, we will be talking about some of these. So remember, you can get the disclosures, the ETF prospectuses in the comment section of the video. All right. So before I go on, I actually wanted to very quickly mention, first, if you go to tradestation.com up here and you scroll down the page, we have our blog post for today, stocks hold key levels. And this chart, things got more volatile, and so essentially this chart it didn't really is not super relevant now. There was a level across here that we had identified last week that has broken, but there's another level that's coming into play today. We're going to get to in a minute. First, I wanted to just tell you that at the top of this blog, we have always this downloads are available here. And this is a zip file. And we'll just quickly remind people how to use that. This is what the zip file actually looks like. It has a series of ELDs in it, which are easy language documents. They have this kind of green look to them. If you have TradeStation installed, your computer should recognize them. And then basically you can import these. So if I click on one of these, it'll then bring in this this little dialogue, and I'm not going to do it because I already have it. But then these when they come in will then be available to TradeStation. And once you have those ELDs imported, you can then go down to these things, which are the workspaces that and we use some of these workspaces. So just so you know, we mostly use MT Main, and we change it slightly over time. So we're currently using MT Main as of July. We update it a few times a year, just depending on what might be happening. So that's going to be in here. The other one we're using right now is MT hourly active chart. I'm going to show you that in a second. But I want to remind you guys that's how it works. The zip file has the ELD files in it, and then it has the workspaces. It also has an old strategy you might want to look at. We did some time ago, although it doesn't really work anymore. Anyway, those are the initial things I wanted to tell you. Now, actually, today, before we get on to anything else, let's take a look at Tesla, because kind of I think the big news right now is going to be that Tesla report has their shareholder vote starting at 4 p.m. today. Elon Musk is expected to get reelected. And here it is, just kind of sitting and consolidating. And we've said that there might be potential here for a breakout through this level. So I think people want to kind of bear that in mind, and just realize here that there are some new kind of stories emerging. It's not just data centers. We also have some things happening in the market now that's pretty interesting in terms of some of the pharma names. We look at some of that. We've talked about biotechs, and I think it's kind of interesting just to see that there are some other things happening in the market. And we're going to get to all those different things. Now, another thing I want to very quickly point out is one of the investors most associated with Tesla is Kathy Wood in her ARK fund. And I want to just point out, I've been watching this chart for a while of the ARK as a weekly chart of ARKK, the ETF associated with Kathy Wood. This is a resistance, or an old support level from back here in December 2021 that this got stuck at. So I just kind of point out that if people want to believe that the market is done going up, maybe this is the signal. But also, if they want to if they believe that there's more upside, then this is a significant pullback that ARK has had here. And if people think that the worst is all priced over, I've often seen this when a stock will rally up to a resistance level, it'll sit for a while, it'll pull back, and then when it starts moving again, it might take it out. So for people looking for long-term opportunities in something like ARK, this might actually kind of be something. It really depends on what your view is. If you think we're at the end of this bull market, then your view is going to be different than if than if you're still bullish. But I want you to kind of point that out, that this is an important level, and a breakout through here might be kind of significant. ARK is still pretty far below where it was back in the previous sort of peak. So I want to just kind of point that out to people. Now, one of the things today that has been kind of an interesting thing is that we've seen in the last week, we've seen a lot of cases of good news kind of getting sold, like AMD, had good earnings, gap lower, rallied back, now it's bleeding lower. Qualcomm today has been similar. Some of these names, things like Robinhood, also good news. They're selling it. So some of these things are kind of showing some degree. Palantir had a similar sort of phenomenon. So these do show a certain amount of fatigue and lack of buying interest and things like that. I want to mention that. I also though want to say that nothing yet has really, in my view, confirmed a bearishness in this market. It is bending, but it's not breaking. And I think we have to realize with some of the events coming up, of course, we have Tesla this afternoon, but then don't forget, after that, what do we have? We have NVIDIA earnings on the 19th of this month, and we're going to get to that in a second. So I'm going to just mention the market right now is maybe bending, but not yet clearly breaking. We had this recent debate where Michael Burry from The Big Short comes out and says that, it's a bubble and all this stuff. And you can think whatever you want about it, but we're starting to get that kind of buzz. I want to just kind of point that out. Now, if you look very quickly here, I'm trying to see if I actually have it. I'm not sure if I have it on this chart, and I don't want to take too much time to add it. See, I don't have MACD here, but I'll just tell you. I think. Wait a second. I have MACD over, and I can show you very quickly. I'm going to throw it on this chart and do the daily S&P. So MACD here is giving basically bearish divergence, where we basically see MACD's been making lower highs as the market makes higher highs, and then I can actually go also really quickly and add Wilder's RSI. The relative strength index here also is showing bearish divergence. It's interesting to see that we did not hit an overbought condition on that last peak. RSI peaked below 70. And so we also have here on the RSI, we also have potential bearish divergence. Now, I'll tell you, a lot of bearish divergence is not always reliable. So I'll just point that out. We had bearish divergence also. I mean, probably at other times you could say there was bearish divergence, like right here and stuff. And, I want to just kind of point that out. I guess it's one of those things that, the one time that the market does pull back, it will have given a correct signal, but it doesn't mean that it's giving the correct signal now. I'm just showing some of the different things that are popping up here. But I think to me, the thing that's most interesting is on Monday. Well, last week when we did this webinar, we identified this level, which was the Friday, October 24th price range, as the first support level. And what do? We came down, we tried to hold it, we broke below it. But what do we have here? Now, this is actually a weekly close here that we actually look back to. So this is a weekly close on the week that began September 19th, which ended October. This week ended October 3rd. Pretty much 67.15 was the close that week, and now we're holding it. So the fact is that on the weekly chart, this is sloppy. Yes, we undercut. We did not hold the gap, and we basically have. I'm going to get rid of these down here. We did not hold the gap, and we've basically turned negative on the week, and that's interesting. Nonetheless, we haven't really done that much damage technically. We're basically holding a low from less than a month ago. So all of these things at this point are not giving any kind of real significant signs of a breakdown. When you look at other times when the market pulls back, look at some of these pullbacks over here in like October. This was a low that went back and it violated from November all the way to like January. When other kind of lows, when the market really starts breaking down, like if you look over here, at the end of 2022, essentially, wait a second. I'm sorry. 2022. All right, the end of 2021, early 2022, you can see that these lows, this is a low from February, went all the way back to like June of the previous year. So when the market really breaks its uptrend, the lows revisit further time periods back, and we haven't gone back even a month yet. So we actually did an indicator on TradingView about that recently if you want to check that out. But I want to kind of point that out, that the damage is not yet really that significant. So, I mean, the thing is, kind of on one hand, it's interesting here is that there has been a kind of crumbling, not a decisive drop. But at the same time, we have a bunch of news, and very often when you see growth stocks, they run into the news. The news is good, they drop. But then 2 weeks later, a week later, they stabilize. And 4 weeks later, they're at new highs. So there is a tendency for growth stocks to do this if you look at it historically over time. So I think at this point, we can maybe count Palantir and AMD in that basket where they kind of bleed lower. And then a week or two later, people say, all right, now I'm going to step in. And it does happen. Growth stocks tend to do this, I've noticed very often. The other thing is also potentially worrisome. But I'm not sure how meaningful it is in a lasting sense. Is look at all these solid candles. We had a bearish outside candle, solid, 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 solid. All these candles are high and they're not holding the early highs. The highs are early and they're not holding, and then they're basically bleeding lower. That is also a sign of kind of lack of lack of buying and a weakening sort of strength. Nonetheless, the pullback has now happened. So I'm just kind of pointing out that these solid candles are a potential kind of warning sign, but they also at this point may have kind of worked their way out. Um, so overall, the S&P has been up 6 straight months, and we also did an indicator over on TradingView that showed the S&P 500 has basically gone. Um, we've gone 130 days now without. Is an indicator over here. One of our scripts. It's gone 130 days without testing the 50-day moving average, and that's the longest since the beginning of 2019. I'm sorry, 2007. So you might want to check that out. It was February. I remember there was that crash in February of 2007. All right. So the thing I'm kind of watching overall, though, is essentially the VIX. The VIX has had a sort of ramp up here, and there have been some signs here the VIX wants to ramp higher. Like if you look, for example, the I think it's the 50 and the 100-day moving averages. There's certain configuration of moving averages that has been more kind of let's see. Yeah. So when I've read certain people have indicated, and a lot of people have different theories of the VIX. But when the 50 gets above the 100 day on the daily chart, it can show sort of kinds of bearishness. Now the problem with it is you might get a crossover like you get here, and it doesn't really mean a whole lot. The market continues just to remain bullish, and it might spike up a little bit more. So I mean, we have seen some signs here the VIX moving higher, but from my view, I think we are staying under 20. And we have seen essentially, um, you know, at this point, like these things I said, now that we're holding that weekly high, for me, that really kind of puts us in a spot where it's worth watching and waiting here. But I think the fact that we're now holding that weekly, not the high, the weekly close on the S&P 500 from back here at the beginning of October, this is actually to me now emerging as the new signal I'm kind of looking at, the new pattern that might confirm old resistance became new support. All right, now, um, this is a few other interesting things. FactSet recently said we have the highest forward PE ratio in the S&P 500 in 5+ years. Now, of course, we have the highest PE ratio since late 2021. Now, late 2020-21 marked the beginning of a bear market. However, the Fed was hiking rates then, and this time the Fed is not hiking rates. That's just something to kind of think about as well. So I think that's important to realize. Also, at that point in time, there was not as clear of a bullish narrative on tech fundamentally. At that point, AI was not really on the radar. People were still pushing stuff like cloud computing and this general kind of, you know, high multiple subscription software and stuff like that. People might actually look now at this having a much more durable sort of enterprise based growth. And back in 2021 was a lot of companies that were trading at incredibly high multiples, and a lot of them were companies like Roku and I mean these companies that are not like strong enterprise businesses, but kind of more less proven consumer facing businesses. So in a way, this is not like late 2021. I think it's important to realize late 2021 had rising inflation, and we were on the cusp of major rate hikes, and this time is different in that respect, I would say. So the other thing to remember is NVIDIA reports on the 19th. So it's another thing is just if the market's going to crash, will it be before or after NVIDIA? So let's look at NVIDIA, NVDA. Now remember, I have this set up to show earnings dates here. That's part of the workspace, but it's one of the studies here under next earnings date study. I want to remind people of that. So it's interesting here to look at NVIDIA. And so I want to kind of think about, what would happen if someone basically kind of thought, maybe NVIDIA is going to be interesting or bullish. Now, what's interesting about today's pullback is with the catalyst of earnings, it actually sets up for a potential opportunity for people to be getting involved on the long side of a bullish call spread. Because the thing is, earnings are on the 19th. Let's go to Option Station Pro, which I have loaded up here. And we can actually see here. So I'm looking at the expiration of the 21st of November because that would cover earnings. And right now, for example, in NVIDIA, a person might think about something like the 190. You could click on the ask, and they could also then hold down the control button and click on the bid at the 200 strike. And essentially, that would be a call spread. Let me see. Oh, you know what? This has moved up since I was taking some notes before, but even then, let's see. So right now with this stock, I mean, say for example, a person thinks Nvidia could go to a new all-time high on earnings. So I'm just going to put that out there. I was preparing this like an hour ago, and it's moved up several points since then. So let's look at something like the 205. So the all-time high on the stock is, 212, 213. So he's saying, you know what? Maybe it's going to be bullish and run to new highs. So a person, for example, could click on 205 and then basically hold down control and click on the 210s. And that's basically a $5 wide call spread for $1. And the stock would have to run about 20 points, which is a little more than 10%. But that also would basically encompass this entire pullback. And a person might go even further out of the money. So I think right now, when I look at the overall situation, is that we've had this volatility, this pullback in the market the last week and a half, and it's brought Nvidia back to its old highs. And now it's showing some signs of stability with the clear catalyst of earnings coming up. So from my view here, I think it's interesting to take a look at and think about maybe people might be saying, hey, there could be some upside. The vertical call spread might actually potentially make sense. The risk reward could, be interesting. We have the pullback priced in. We have the pullback, which has made given us it's lowered the area of a potential break even for the strategy. And then the other thing is we have the catalyst. So you have two potentially bullish things: a rebound from the pullback and the earnings themselves. So this might actually be an interesting sort of thing people want to take a look at. Now, Microsoft, it's just this kind of big sloppy mess of an earnings report. I think something like this here, I mean, people might say it's a double top and everything like that. And that might be true. However, the thing is, I mean, the problem with Microsoft is when you get this big, I mean, what are you going to do with the company? No one's going to buy them. And they're kind of like, you know, it's hard for them to really do something significant in terms of upside. But I would, first of all, I would just mention they've had two earnings seasons, two earnings reports now without a breakout. And, the 200-day moving average is coming up. So this might be something to be thinking about in a month and a half, 2 months, as we inch toward that next earnings report. That's when more significant buyers might be interested. However, in the shorter term, there is a support level down here. This low was right around 492. So a person could say, you know what? Maybe something in Microsoft. Let's take a look here on Microsoft. Now, this might be something different, selling a put spread. A person might look here at November, and for something like this, the low was at 492. So, for example, you click on the bid and then go down to like 485. Let's see, the pricing has changed on these. That's about $1.10. It's not as favorable as I looked at when I was preparing my notes about 30 minutes ago. However, I think it's important to realize here a name like Microsoft coming down, holding these levels, this is some potentially interesting support on Microsoft. And the thing is that this might be something also people look at put credit spreads. Now, another thing is Meta. Meta's in a similar spot. It's gotten really hammered. But if you look here, what do we have? We have the price gap from back on May 12th when Scott Bessent was over in Geneva with the Chinese and came out with some positive news. This has really pulled back to try and hold those levels. And so I want to kind of point this out. I think this is something here where people might see a similar thing. Now, remember, these would be ideas. Potentially, people might say, you know what, the short-term trend is bearish, but there is some longer-term support, intermediate to long-term support. And in that context, if we actually get confirmation the support is holding, it could make sense for people to be selling premium. When you have a lot of negativity in the short term, going long options and buying premium can be a way to, it doesn't always favor you, but selling premium, because then you're basically pricing in further downside not happening and you're getting paid instead of paying. In a moment like this, with things having pulled back, these names might both give opportunities for people looking to sell put credit spreads. I'm just kind of watching this and identifying it. Don't have a lot more to really, say, except that we have two major companies with really significant options volume and liquidity that have had some very significant pullbacks, and they're getting back to some levels where put sellers and credit spread sellers might be kind of interested. Now, another name I want to mention that is less liquid and not pulling back nearly as much is Vertiv Holdings. We've talked about this name a lot, but it's interesting. Look over here. We had identified on this breakout around here, and we said that people should watch for a test of the 8-day EMA, which it gave a few days later. And now here it is again. So remember, over on MA Tools, let's put in VRT, and I'll show you what I'm talking about. You can say the 8 and the 21-day EMA are both lighting up. So those are kind of short-term trend signals. And I want to just mention that, we could actually, let's just really quickly go here, data, add symbol list, NASDAQ 100. We can quickly see stocks that are pulling back to the rising 21-day exponential. We have Advanced Micro Devices, for example. There it is. You can see that 21. So remember, these are some of the tools we provide. CrowdStrike also, Cisco Systems. The Cisco reports, I think, next week. See, there's CrowdStrike, CSCO, Cisco reports next week on the 12th. So again, all these are sort of tools that are right here for you guys. You might want to check out for trend following. And something like the EMA test, pullback for those rising. Now remember, this is also going to be color coded. It will tell you if the EMA is rising or falling. So for example, you can look at these. Look at Nvidia, for example. The EMA is falling, or a name like I don't know, Baker. I don't know. Let's look at like Fang, which is Diamondback Energy. The EMA is falling, so it has the color coding all built in to kind of help you see what's happening right there on radar screen. All right, I'm going to continue now by mentioning a couple of others, which is Datadog. Strong earnings today, obviously. Wow, it's extended more. This has been an interesting like basing pattern that this stock has been in here. I mean, basically, this was a level from last December that it's now ripping out and breaking free of. This is an interesting sort of breakout. Obviously, it's quite extended. Now, one of the ways you might want to think about that is that 8-day EMA. Again, using our MA tools, go down here potentially, think about maybe DDOG, and then when does this light up? When does the 8-day or the 21-day light up? Remember, we mentioned Intuitive Surgical also on that kind of thing. It was up here, and we said maybe set it in radar screen. There it goes down. It tests that level. It's up a little bit. ISRG. That was just an example of ways people might look to use this tool. We had done it for VRT after we had the rally above back here, and we said use the tool to think about looking for potential opportunities. And so I want to mention that in Datadog. Snap, similar. And in fact, Snap here, this had an interesting earnings report. I want to just mention, people might want to look at this one. It is one of these companies that I've just noticed that, I mean, it has not been in favor for a while, but it has this bullish outside week here. I just want to mention it had an interesting earnings report, and technically I'm looking at it and nothing's very clear, but I think people might want to start thinking about here what's happening in Snap. Now, another name that I cannot figure out but is interesting is Marriott. Marriott had strong earnings, and this pattern is kind of freaky. I mean, look at how tight this thing has been, and now it's breaking out of it, or it's trying to break out of it. So I think we want to look and see if something happens here with MAR. This is one that when things are in these long, tight patterns and they break out, Goldman Sachs had one of these a while back here. It was this kind of just bizarre pattern. It was so tight, and it was just like, what on earth is happening? And then when it broke out, it just went on a run. So I think it's just kind of interesting that a name like MAR, and we had one of these with McDonald's like 2 years ago. I remember McDonald's had this crazy kind of pattern right here. Wow, that was a long time ago, and I'm feeling old. But we basically did a trading view idea on this right here. We had this really tight, and then when it broke out, it just ran. So MAR, that was a weekly, but MAR here in this tight pattern, and it's just interesting. And I'm not sure what's happening with them, but I want to point that out because patterns are sometimes worth paying attention to. Now, I want to go back over really quickly here to my trading view chart and show you some other things because the dollar index is showing signs of peaking, and I've been kind of watching this and wondering, but I do want to mention, I mean, I've been kind of trying to figure out how much does the dollar squeeze higher? How dangerous is this uptrend that we saw in the dollar? Because, I kind of thought the dollar wasn't going to go much above 98 and a half, and then it kept going higher, and I've been kind of waiting. But now if we look at it, we have some other patterns that are coming into play. So the first thing that's coming into play is basically this high from back here at the beginning of August. We stalled at it. We have the 200-day moving average coming down. So those are some things just to think about here on the dollar index. Now, I'm mentioning this because I'm going to get to the other thing, which is actually this year's strongest trade. I'm going to get to, of course, our friend gold. But the thing is that look at the dollar index here on this weekly chart. You can see here's a resistance level or support level from July of 2023. You can see how we held above it and we broke under it, and we have not really been able to get back above it. So from my view here, if the dollar peaks here and starts to see some downside, this is also something where it's not going to be consistent necessarily with a horrible sell-off in equities. If we basically see the dollar peter out here and start crumbling, that would be a positive potentially for equities, and it would also be a positive for emerging markets, as we've often spoken about on this webinar. So I want to just kind of mention the dollar index might be peaking. And so it's interesting that, we've had some hawkish news like the ADP jobs data this week, the ISM services. Jerome Powell recently was kind of saying, we're not sure we're going to cut rates and all that. But I think the point now is things might be as kind of as hawkish as they're going to get for a while. Now I want to just quickly share over here on our ideas on TradingView. Today we did something on oil. And to me, I think a kind of sneaky thing out there is that oil is potentially setting up for a breakdown. And I think that that would not be bad for the Fed. And you look at oil here. I mean, the weekly chart of oil shows some issues, and everyone's been looking for honestly, everyone thinks there's going to be a war, and it's just not happening. And so the thing is that if we get to this point when the geopolitical risk doesn't blow up, and no one wants that to happen, but the market's been looking for that. If we get to a point when the geopolitical risk sort of fades, and there is potentially some geopolitical risk priced into crude, that people might see some downside in. So I want to point that out here, because I think we could be setting up here now for oil pushing back into the mid to low 50s. And this is a 52-week low on it. The supply numbers are through the roof, and I want to just mention that. The other thing that's interesting is Stephen Moran speaks tomorrow. He's Mr. Super Dove on the Fed. So we do have some various things, and today we had lots of job cut data that was kind of looking that direction. So let's take a look now at the GDX, the gold miners. It's kind of interesting to me here that when we look at this, in and of itself, there's a few ways to think about it. And these are one of these charts that you can basically be bullish or bearish, and you kind of almost have to decide what you want to believe. And so I want to just kind of point that out, because this is in many ways, I mean, there's a serious drop, and the short-term momentum and the short-term trend is pointing lower, the 8-day under the 21-day exponential and stuff like that. However, this pattern, these two candles here, if you look on the weekly chart, look at how we have now, it's holding this weekly level on the GDX around 68. So to me, this is actually something that invalidates this downtrend. You recognize a trend in place, and then you get signals against it. And now we basically have a short-term downtrend, but we also have a short-term double bottom potentially. And this kind of candle, when it goes down and just doesn't hold, that is often something that is actually kind of interesting. So from my view here, this might actually be something in GDX that is starting to show the beginnings. What's interesting is, look at GDX. It crashed, basically started crashing on the 17th, and then look at gold. It didn't really crash until the 21st. So historically, GDX has kind of moved before gold itself. It's also trying to get back above the 21-day exponential moving average today. So that's GDX I want to point out. Now, another thing that's interesting is Barrick Gold, Barrick Mining. It's actually, I believe, the most active underlier in the entire GDX. Remember, GDX is an ETF. GDX trades a ton of options, but you can actually look over here. If we go to our let's see, MA tools. I can just go over here. Look at GDX. Look at the big ones: GDX, Barrick, NEM. You can see that Barrick, yep, 53,000 contracts a day. See, GDX is like 206, but Barrick is an active underlier. It's pretty active and it reports earnings soon. Look at this chart. Now, it's pretty interesting. So let's take a look over here on Option Station Pro. Earnings on the 10th. So let's flip up here to the expiration of the 14th, which we've got. And people might want to say, you know what? Look at this stock. The stock basically peaked above 36. So what would happen? I mean, even to look for a strong earning, an earnings report, because very often on earnings, it's not about even if the earnings are that good, or it's just a question about it's a liquidity event. And that very often, if people want to return and buy, the volume will come at earnings. The move will come then. That is when institutional investors will often position. So people might want to just look here at like the 34 calls, 62 cents, maybe go down here to the 36s, hold on the control button, and you now have potentially a 40-cent cost on a $2 spread, which is potentially more than a 400% potential return if it closes at $36 at the end of next week following earnings. A person could look even higher, but I think it's interesting here to look at Barrick Gold, because you also have something like a bullish kind of triangle here, holding the 50-day moving average. I mean, there's a lot of things to look at here with gold. Look at the GDX and actually look here on the, there is this trend line that, let's see if it can kind of break out through. It's just that this is on a year-to-date basis. Let's go over here to key ETFs. Look at our industries. Look at year-to-date. And GDX is up over 100%. So the fact is that GDX and metals, they're like way ahead of chips. I mean, it's like insane that, this up more than double this year, and its chips are up something like, 42%. So the fact is, on a year-to-date basis, this thing does potentially have momentum. And I think right now, seeing the dollar peak and everything else, the risk reward might be shifting back toward gold miners, and something like Barrick with the earnings coming up, the most active underlier in the group, it might actually give an opportunity. So I want to kind of mention that. Let's see. Well, those are the main things I wanted to mention today. Hope everyone has a great day. We'll be back on Monday with State of the Market, Monday at 2 p.m. Eastern. That's when we look at the big indexes and the ETFs. And well, the one last thing I did want to show you was this chart here, my hourly active chart. The signal on this one is when this is the S&P 500, but the symbol on this chart is basically when let me just show you when this goes when RSI goes oversold. So basically here you can see when RSI is overbought, but you can see today we made a low on the week. RSI went oversold. Now you can see that now this is the daily MACD. I basically has a much longer time frame to match a daily. It simulates what the MACD looks like on the daily. So it's interesting here that in many ways we have kind of showing some signs of slowing momentum. However, we've hit an oversold condition, and it's also interesting. You can see, like I mentioned on the daily chart, we're holding that weekly close. But at this point, I think we're at a spot where, well, when the webinar started, at least we were kind of holding that level. So at this point, I want to just kind of mention those things. Remember, on this chart, the thing that is most useful potentially is looking for that RSI oversold at a time when MACD has been rising. And the real signals come from things like this. It didn't quite go oversold, but you can see MACD was just starting to turn up. And you can see at other points that I have just found that this can be a very useful chart. When that RSI goes oversold on the hourly chart, it can be a real meaningful signal. Now, if we're in a total structural downtrend with like the 50-day, the 20-day under the 50-day and all that, and the daily chart is really bearish, it's not necessarily going to give you the signals. But at this point in time, we don't yet really have a lot of structure to the downside on the daily. But I wanted to remind people, this is one of my favorite charts. It has a lot of interesting things. It shows 52-week highs. It shows weekly lows. It shows the first day of the week. So all those things are interesting. Hope everyone has a great day. We'll see you on Monday with State of the Market. And remember that the Tesla vote is this afternoon. Take care, folks.